So there's an old saying out there that says, what goes up must come down. So with the stock market currently at all-time highs for no apparent reason, a lot of people are wondering if the stock market is about to crash again. Now, I'm no financial expert by any means here, but I am going to share with you my thoughts and research on the subject, and it is entirely possible that we may see another correction in the near future with the stock market. So if you have any money invested at all in the stock market, or even if you're waiting on the sidelines to invest, you're going to want to stay tuned for this entire video. I'm going to be explaining why the stock market is currently at all-time highs, what could potentially cause the next stock market crash, and lastly, what I'm doing with my own investment portfolio. And one last thing here, guys, a great deal of research went into this video today, so if you don't mind, just go ahead and drop a like on this video, as that allows this video to get shared with more people. So, first of all, why is the stock market currently at all-time highs? Well, you see, this year for Christmas, the stock market wants just one thing, and that is a big old box of certainty. Because when there is certainty in the market, investors know exactly what situation they are preparing for, and they can invest accordingly. Now, you might be a little bit confused by that, because looking at the news today, there's pretty much no certainty out there whatsoever. For example, we don't know when this global pandemic is going to be over, we don't know when the vaccine's going to be rolled out, who's going to get it first, or anything like that. So a lot of people are wondering, why exactly is the stock market celebrating, and what is it possibly up for? The thing is, right now the stock market is doing the exact opposite of what we would expect it to be doing. And based on how 2020 is going so far, I'm honestly not surprised. Overall, not much about this year has made a lot of sense. So, for example, election years tend to be very turbulent times in the stock market because there's the major unknown of who is going to be elected. So we know now that Biden won the presidential election, which again makes the notion of this stock market climbing higher and higher even stranger. And that is due to the fact that Biden wants to raise taxes for big corporations, which will essentially mean they earn less money, which should make stocks go down. Because, like him or not, Trump was good for the stock market. The Tax Cuts and Jobs Act that Trump passed in 2017 lowered taxes across the board for corporations. And of course, less taxes means more profits and more earnings for these companies, and better earnings result in a higher share price. And so based on the election outcome, you would think that the stock market wouldn't necessarily be at all-time highs. However, it is. So why is the stock market at all-time highs? It comes down to a couple of different factors. So the first main reason behind this is all of the stimulus money that entered our economy earlier this year. Trillions of dollars have been pumped into our economy as a means to prop up the stock market, and it pretty much worked. Essentially, the government has a blank check when it comes to printing stimulus money. They've sent it out to corporations, individuals, and small businesses, and this really did help the economy stay afloat. Another reason why the stock market is at all-time highs is another move from the Federal Reserve, and that is keeping interest rates as low as possible. Right now, interest rates are extremely low, and that means it's very inexpensive to go out there and borrow money. And when borrowing is cheap, more people do it. But low interest rates work both for you and against you. They work for you in the sense that it's cheaper to go out there and borrow money. However, they also work against you because then you earn next to nothing when you save money in the bank. Right now, saving money means you're losing money because you're not able to keep up with inflation based on the current interest rates being paid by savings accounts. Even the highest interest online savings accounts are only paying around 0.6 APY right now, and we know inflation sits at around 2%. So what do you do with your money when you can't save it? Well, some people spend it, but a lot of people invest it. And when it comes to investing, people typically invest in stocks, bonds, or real estate. But there's a big problem here with some of these investments. First of all, because interest rates are so low right now, yields from bonds are also extremely low, to the point where these are not even keeping up with inflation either. So now you have these would-be bond investors who can't really invest in bonds because it's a bad investment based on the current interest rate environment, that are instead investing in other things out there, such as the stock market. But what about real estate? Well, record low interest rates have also caused a bit of a housing boom because it's very cheap to go out there and get a mortgage on a property. In fact, earlier this year, it was cheaper than ever before to go out there and get a 30-year mortgage. So as a result, people are flooding the real estate market looking to buy single-family and multifamily properties. So of course, prices are going up. So now you have the situation where you can't exactly save your money or else you're going to lose it. The bond market sucks and real estate prices are getting pretty high, so a lot of these people who would be investing in bonds or real estate or just saving that money are instead just putting it into the market. On top of this, we are also seeing record high participation in the stock market thanks to these commission-free investing apps. You see, in the past, it was difficult to invest in the stock market, believe it or not. You would have to have a brokerage that you would go through that you often paid commissions to, somewhere around $7 to $10 per trade, and you usually had to have thousands of dollars just to open up a brokerage account. Now, there are countless apps out there that let you invest with $0 commissions and no account minimums. So at this point in time, literally anybody in the United States can invest. Even if you have like $5, there's apps that allow you to do this. So when you have all of these new participants in the market, this again pushes prices higher and higher because of all of the demand. But wait, there's more. There's also the FOMO that's been triggered, or the fear of missing out, because the market has already returned to where it was before the whole pandemic. Because during the global pandemic, millions of people decided to pull out of the market, and that is why the stock market crashed in the first place. But you have to think that these people eventually will likely decide to begin participating in the stock market again. So when they saw the market going back up and maybe passing previous levels, a lot of people panicked and said, I gotta get back in the market, I don't wanna miss this train. Not to mention, you also have these gold investors and bond investors who pulled out of the market who may be re-entering the market now that they see a vaccine emerging, and maybe they view the markets as a little bit more safe. So inevitably, when you have so many people participating in the stock market, you end up with the situation that we have today. The demand for stocks is so high that prices just keep going up and up for no apparent reason. And it's to the point now where a lot of the prices in the stock market are totally illogical, in my opinion. So that is why the stock market is at all-time highs. But what exactly could cause the next stock market crash? Well, in my opinion here, there are three main things that could cause the next stock market crash, and the first one is the global pandemic. It seems like we all forgot about this pandemic, and then we didn't. All of a sudden, people are talking about it again for good reason. And that is because cases of this virus are literally skyrocketing right now. There's no other word to describe what is going on. And this is officially the third major surge of this virus, and it's unfortunately way worse than it was in the first two surges. You see, we just hit a new daily record here in the US at 184,000 new cases in one single day, which is higher than any day before. Not to mention, the way the charts are looking, we're probably going to continue to break this record. And to make matters worse here, cases aren't just skyrocketing in the hot spots that we saw earlier, like New York City. Cases are skyrocketing everywhere in rural areas, which makes it more difficult to combat this virus. And on top of that, you have this widespread pandemic fatigue, where people have been quarantining for 6 months and they're getting tired of it. They're taking off their masks, they're letting their guard down, and that is why we're seeing this massive uptick in cases. For example, here in New York, they just passed a new law that restaurants and bars have to close at 10 p.m. and be takeout only past that point. Other states are closing down businesses, closing down gyms, and things like that. Now, there was some good news about the potential effectiveness of vaccines that are being researched. However, there is still a ways to go until there is a rollout of a vaccine here in the US. There are 3 different phases that a vaccine must go through before it's approved for limited use. And right now, leading vaccines that are being researched are only at phase 2 at the latest. We know that the Pfizer vaccine and the Moderna vaccine are above 90% effective. However, both of these vaccines are still just in phase 2. To make matters more confusing, both of these vaccines require you to get 2 shots spaced out weeks apart. And on top of that, the Pfizer vaccine that's being researched needs to be stored at negative 94 degrees Fahrenheit, making distribution of this vaccine very complicated. Pfizer and Moderna are hoping to have 40 million vaccines produced by the end of 2020, and those will likely go out to frontline workers and the elderly first. But there's a lot more than 40 million people in this country who need the vaccine. So the next wild card here that could potentially cause the stock market to crash is the election. So we know now that according to the Associated Press that Biden won the election. However, the whole situation is still very confusing. As of recording this video, Trump has not conceded this race, which means that Trump has not acknowledged Biden as the official winner. He believes there was substantial amounts of voter fraud, one example of which being ballots arriving in unmarked vans with out-of-state plates late in the night, so he's issued these lawsuits in many different states. The problem here is that this puts Biden in a situation where he is unable to do his job because Trump won't concede the race. So as a result, right now, Biden is unable to get access to key information about the pandemic, the vaccine, and things like that. And if Biden is forced to wait until January 20th to start making a plan for rolling out the vaccine and taking care of this virus, that's going to put him many weeks behind. So there's a ton of uncertainty surrounding the election still, even though the race has been called, and this is just a major question mark in my book that could potentially cause a correction or maybe even a crash with the financial markets. And then third and finally, we have the topic of additional stimulus, which could prevent the next market crash, but if we don't get it, it could also lead to the next market crash. So at this point in time, most economists agree that additional stimulus is going to be required in order to help keep the economy afloat in late 2020 and early 2021. Not to mention, if there's going to be more business closures and shutdowns, we're going to have to support those workers and those businesses, which means additional stimulus money is needed. However, with all of this post-election turmoil going on right now, we aren't likely to see a stimulus package passed anytime soon. Right now, the Democrats are pushing for a new $2.2 trillion stimulus package, and on the other hand, the Republicans want to spend just $500 billion. Neither side wants to budge, and so we're essentially at a stalemate. Now, both sides are in support of additional PPP funding and more stimulus checks being sent out to low-income Americans. However, one of the sticking points is that additional $600 per month of unemployment benefits being given to those who are unemployed. So we're almost certainly going to need more government stimulus, but if we don't get it at the right time or if it's held up in Congress, that could result in a market correction or a crash. So all of that being said, guys, here are my thoughts on the situation. First of all, any bad news or hiccup related to the vaccine could send the stock market tumbling. For example, if there are delays with the FDA or they find out that the vaccines aren't as effective on a larger scale, all of this could be bad news for investors. Second of all, the longer it takes for Trump to concede the election or for us to get some certainty here, the longer it takes for Joe Biden to be able to do his job and get access to key information. And again, this could just delay the whole process of rolling out the vaccine when it becomes available. Lastly, as mentioned, we're probably going to need more stimulus in the future, and if we don't get it at the right time, the market could become totally unhinged. So over the past couple of months, what we've seen with the stock market is a seesaw pattern where it goes up and it goes back down and then it goes back up. And I would expect to see the exact same thing happening for the next couple of months until there is some major positive news that pushes us past the previous price levels that we hit before the pandemic. But if we get any major bad news, which will probably come from those three things mentioned, the stock market could in fact have another crash or correction. So that being said, here's what I'm doing to prepare for this potential market crash. And no shocker here, guys, I'm pretty much not doing anything, which is what you may want to do as well. Now, I'm no financial advisor, guys, and of course, this is not financial advice, but this is simply what I'm doing with my own money. So first of all, I'm keeping all of my positions the way that they are as far as my dividend stock portfolio goes, my crypto investments, and crowdfunded real estate. I'm not adding any money to it, but I'm certainly not going to be selling either. I'm just gonna let it be and pretty much forget that that money's even there. The second thing I'm going to do is dollar cost average into more of these investments. And in particular, I'm going to be investing more in index funds and more passive investments. 2020 has been kind of a crazy year, so I'm gonna see how my tax situation pans out. So mostly in 2021, I plan on doing more of this passive investing into index funds and things like that. Lastly, I'm going to be seeking out more of these alternative investments. That way I'm not investing in bonds or stocks or real estate. I'm in other investments out there. So I've made a couple of different angel investments this year, and I plan on doing more of those in the future. And again, guys, at the end of the day, nobody knows what's going to happen with the markets, and you really can't plan accordingly because it's a total wild card. And even if you did time it right, and let's say you sold and the next day the stock market crashed, well, eventually you have to make the decision of when you're going to get back into the market. So you don't only have to time it on the way out, you have to time it right on the way back in. And the odds of doing that, guys, are pretty low, so that is why I'm just going to stay the course with my investments and not worry too much about whether or not there's going to be a crash or correction. But that being said, guys, thank you so much for watching this video. I hope you enjoyed it. If you did, make sure you drop a like and subscribe. Hit that bell for notifications of future uploads, and I hope to see you in the next video.